Well, thank you for having us. Yes, we do help wildlife partners with their insurance on their animals. They've been a great partner with us. This is our first year talking at the event. As Brian's been saying, the wildlife industry is still very new. So insurance to insuring exotic animals is still very new. So, thank you for Katie and Wildlife Partners for having us. Y'all have done a great job putting this all together. Just briefly, raise of hands. Who has bought insurance or who currently insures their exotic animals that they have? Okay, that's what we thought. So that's what we're here for. So we'll go to this next slide and okay. All right, so what we're going to talk about is we're just going to talk about the coverage as a whole. What are we buying here? How are we protecting our animals? How do we get insurance on these animals? So when we talk about underwriter information, if you're talking to me, I'm going to have a lot of questions for you. Here's what we're going to need to know. Budgeting your costs. Believe it or not, there is a budget to this, and I'm going to bring Brian up whenever we get to this slide and talk about the premiums and how it allocates, but also to the tax advantage for whenever you're writing this off. We're not tax people, we're insurance people, and apparently you can use insurance to actually make money in this, and we've never heard of that before, so Brian's going to help us talk to that as well. We're going to talk about how to handle a claim, what's going to happen if we have an animal die, what are steps we need to go to help make sure that we can get the care or that information to the carrier, and how we can get you guys repaid. And then we'll end with just talking about ranch insurance. Because Higginbotham, we are not an insurance carrier, we are an insurance broker. And basically what that means is you bring the risks to us, and we have 400 plus markets out there. Of course, with the wildlife industry, it's a little bit slimmer. But we take your risk, we take it to the market and try to bring you the best deal available. All right, so coverage is available. We're talking mortality. This is the life of insurance. The life of the animal, it's basically I'm a life animal insurance salesman. We're trying to protect your animal. And so restricted perils right there in the middle of the screen. So whenever we talk about this, we are talking about acts of God coverage. There's no accident coverage here. Literally, you can read along: fire, lightning, explosion, just something that only God can cause for this animal to die. To be honest, whenever we talk to different insureds that are looking to buy insurance on these animals, we don't even discuss the restricted perils. This is basically your base coverage. As Brian said earlier, if you're looking to cut corners and get things kind of processed fastly to hopefully make some money, that's what the restricted perils is. The all-risk mortality, that's what whenever we're talking to our insureds, that's what we're selling them, and that's what we're going to give them. So the all-risk mortality covers all of your restricted perils, your acts of God coverage, but it also protects the accidents that can happen with these animals. As y'all know, in the industry, these animals are pretty good at dying, and they like to do that. So, just for an example, I dealt with a guy, we had a conversation, and he wanted to insure a couple of his Nyala deer. Not 2 days later, does he get back on the phone with me and says that his Nyala that he wanted to insure has now passed. And I was like, well, my man, how did this happen? What happened? Well, it stuck its head through the fence and gave itself a heart attack. I was like, well, that probably would have been covered under insurance, and now, instead of being able to at least get some repayment, having that animal insured, he is now out $25,000. So that is what we're buying here. And then we have extensions available to this mortality coverage. So as you can see, we've been talking about trapping, we've been talking about transporting and moving the animals. What happens if you buy an animal from a seller, and from that period, whenever it's in its truck or from trap to trailer to your property? So the transit piece is very often paired with the all-risk mortality. To be honest, it's actually a very cheap coverage compared to the mortality coverage, and I actually think that's where majority of the risk is. So for the value that you're going to get for this transit coverage, it's very cheap. Included in that transit coverage, we have loading and unloading, so, catching with the traps. For example, we had a gentleman, he bought a couple of kudu. Three kudu arrived, 2 were alive, 1 was dead. So in the event that he didn't have it insured for transit coverage, but in the event he had transit coverage, that 1 kudu would have been reimbursed. And also, feel free to pop in with any questions. I know this is a very new topic to everyone, so before I move slides, just any questions available about coverages or anything before we move on? Yes, sir. Are you wanting to cover for the life of it or for the transit? Yeah, for sure. So great question. And so say you buy a couple kudu from Brian. And so you've paid for those. Those kudu are now yours. Now his team is now going through the transit process of, we're going to capture it, we're going to load them, we're going to deliver to you. We can start the transit as soon as you've purchased that animal. And so basically as they're loading it, I know Wildlife Partners provides a warranty, but in this example, that would be covered under your policy.
And real quick, one of the biggest things is the more time you can give us, the better. Right? We tell everybody is if you know you're going into that process, go ahead and give us a heads up. That makes a big difference.
Yeah, good question. Anyone else? Yes, sir. Are you looking for credits? Yes, that is a great question, and we'll just go ahead and get to the next one. So that's a really good point, because not only are we buying insurance on these animals, you're wanting to sell your risk just like any other company. You own a construction company and you want to talk about how safe your employees work. So we're talking about how safe is our ranch. If we're gonna buy insurance on this carrier or on this animal, the carrier wants to know, what are we doing to keep up with this animal? How often do we see this animal? Is it tracked? What are the medications? What are the doses? If you have that information, give us everything that you can, because that just helps make your risk look better. If you're just looking to buy insurance on the animals and you can't really give us any details about how often you're going to see the animal, they're not tracked, you could just buy it, they're on the land, and they're on 600 acres and they're just under trees and grass and you're never going to see them, maybe once a month. That's not going to be a super attractive risk to the carrier. But if you're able to really tell us about, all the improvements and updates to your ranch, that's going to help the carrier and the insurance company feel a little bit better, knowing that we're doing everything that we can to help mitigate the risk of this animal dying. Like I said, they're good at dying, but if we can show that we're going through all the steps to keep them from dying, that will definitely help make your risk look a lot more available.
Yep. And one thing to please understand is we as agents are definitely on your side. We're a part of your team. So the more transparent you can be with us, the better it is. Insurance carriers love it when they feel like they know everything, right? The less they know, the more nervous they get, the higher the price gets. The more they feel like they understand, the more they feel like they know, the lower the price is. So if you can be transparent with us, that's great.
Yes, sir.
Well, how many ranches in Texas are actually utilizing the insurance program right now? You asked us, how many of us are utilizing it, all besides Brian, there's none.
Not a whole lot.
How many did you say?
Oh, goodness.
Less than 5, maybe? At least that work with us.
Trial and error right now?
So let's just go to this slide. So we'll just talk about how it's budgeted. here's what your premium is. So basically, you take your total insured value, which is basically the value of the animal. So say you have a $50,000 kudu, that's what we're valuing the limit for this policy, and it comes with the policy rate. And each animal is not rated out individually. It's the policy has a rate, and it's times multiplied by that total insured value. So for example, you have a kudu at $50,000 times a 10% policy rate. That premium for that kudu is going to be $5,000. Annual. This is an annual policy. I've heard some confusion talking with people curious about insuring their animals. Well, we've heard this is a quarterly thing or a biannual thing. No, this is a year policy. And Brian put it a good way to me yesterday. This is insurance until you have a female calf. Because once you have a female, then it's going to repay. And Brian's going to be able to touch on that a little bit better than I. Because really, as insurance agents, we never thought about it that way.
And let me jump in here real
Yeah.
quick. One of the questions too on the premium calculation. So understanding that, these premiums have been done for years and years for rodeo bulls, show horses, things of that nature as far as mortality. So the insurance carriers have a basis on their mortality premiums and how they figure that. Now, having said that, as far as exotics, it's new. I mean, we're just at the infant stages of the insurance of exotics, and Higginbotham with Wildlife Partners actually created this program through Lloyd's of London. So this is a newer program when you're talking exotic insurance. So like I said, in the infancy stages, but something that I think is going to be huge over the next 10 to 15 years.
These actual numbers, so the assumption is a 1 in 10 loss ratio.
Yeah.
Something close to that.
Correct. And so the 10% policy rate on just new standard business we're seeing, the 10% rate's an accurate number. So
Now
that could be what your premium could cost if you buy a $50,000 animal.
going to earlier talking about transparency, that 10% is a standard rate, right? The more that insurance carrier knows, the more comfortable they are, that rate can start to drop, okay? We don't see it varying a lot, but it does drop, but vice versa. We send them something, they don't know anything about it, they feel uncomfortable, like, this is a big gamble, that rate's gonna start going up.
You said they, but you said they, but you specifically said Lloyd's of London.
Right, so Lloyd's of London consists of a huge incorporation of insurance carriers or brokers. Okay, so when I say they, you go through Lloyd's, but there's a number of carriers that are used for this insurance. We just use Lloyd's as a basis.
Does that 10% go down if the owner of the animal is willing to take some of the risk, like a $10,000 deductible instead of $5,000 or $15,000?
So yes, you can bring that rate down. And so you'll see the co-insurance example. So think of co-insurance, and as Brent said, this is written out of London for the most part, so their terminology is a little different. That co-insurance is basically a percentage of deductible, and it is a percentage of the value of the animal. So for example, you have this female kudu, $50,000. It dies and it's covered by a covered loss. That $50,000 is there multiplied by your 10% co-insurance, which is $5,000, and your payout from the carrier would be $45,000.
Yep.
Yes, sir.
So let's say, like you've got right there 10 animals for a $40,000 premium. And I call and say, oh, one of them's dead. What do I got to provide you that says one of them's dead? Eventually, gotcha.
So before we jumped ahead, so basically we're talking about all the underwriting information and what we're going to need. So whenever you come to us, I'm going to have, okay, how many animals are we insuring? What's the schedule look like, whether it's 1 or 10? If it's 10, like you're saying, we're going to have a sheet like this that says, all right, we have this many females, we have this many males. Here are the values per the head of the animal, and here's the total insured value. So for all of these animals, this is a bit dramatic, we get it, but it's about 2.4 in million values, but these are all itemized out. So if you just have one female Dama gazelle die, we know how much that Dama gazelle is worth, and it's based on how much you paid for it. And so we have all the coverages. that we're gonna ask, and they're gonna be in an application form. So whenever you're really trying to sell your ranch, it's gonna be done via the application. The next thing, as far as underwriting information that the carrier is gonna wanna know to get coverage on these animals is, I work with Dr. Pam Barker on a lot of these. She's fantastic, she's great. As Brian said, she's all over the place helping with all the captures and transits. The carrier wants to know that, just as you buyers want to know that you're buying a sound, healthy animal, the carrier wants to know that you're also buying a sound and healthy animal, and that we're not just going to buy an animal and then 2 days later it's just going to die. So they want to know that a vet has checked to ensure that it's in good health, the environment that it's been living in is in good health, and the direction where it's going, that ranch is there in good health. So it's very important that we have this vet certificate information. And as Brent said earlier, we need to be very proactive in thinking about these things, because it takes a lot of coordination to get all of this together. It's a lot of information, and we understand that. So it's tough to push back on the carriers whenever they really want the vet certificate, and maybe we didn't do the proper scheduling to get a vet out there to either check it during transit, or if we said we're going to get one checked, after transit, and we drop the animal off and we can't find a way to get it, then we're going to have issues with the carrier. Yes, sir.
This question is about proof of mortality.
Proof.
What's it required to
So,
one of them was lost, right? Like, hey, one went through my fence, don't know where he's at.
Right.
I want my money for it.
Right, yeah, so that could be a tough one, because that can be mysterious disappearance, right? And we say, hey, was it ever really there, was it not? So that's where bills of sale, that's where pictures, that's where videos, anything like that comes into play and is a wonderful thing. We say, hey, it was here yesterday, here's a picture of it, here's a camera, we bought it last week, here's the bill of sale, things of that nature, because insurance, once again, doesn't like mysterious disappearance. They like some sort of proof. Now, obviously, we don't know where it went, right? But we know it was here yesterday and it's gone today. So that's what we need. We need as much as we can to go to bat with the insurance carrier on your behalf to make sure that, that is covered. Because your example's a tough one, right? And it doesn't matter whether it's an animal or whether I left $10,000 on that table last night and the insurance carrier says, are you sure you left $10,000? I promise. Sure you did, right? So mysterious disappearance, very difficult. So that's one where any evidence makes a huge difference.
And just in that example there, I mean, if it ran through the fence or jumped over a fence, the insurance carriers would be like, okay, well, if he knew that he had these sorts of animals that could jump over or run through fences, why didn't we go through the work to reinforce it? So if it is one of those deals where, hey, I was going through the efforts, I knew I needed to reinforce my fence, it just takes time, and you can go through and actually show proof that, hey, I was talking to a fencer, I was talking to a welder, something like that, we could probably make the argument to get that covered. But we could probably sit up here and talk claims all day. That's what we do in insurance.
That is the job.
So, I just want to finish going down that path we were talking about, and then we go to co-insurance. Because what y'all do up there is you just deduct the amount of the deductible from the total amount, and you just pay $4,500 instead of $5,000. What I'm talking about is the waiving the 10%.
So yes. So I have actually worked with one where he was able to take a higher coinsurance, so basically a higher deductible, to bring that rate down. So we were able to bring it from a 10 to a 9%. We were able to bring it down from a 10 to a 9%.
So you're seeing that so far, really, it's not much less than 10%.
For new business, 10% is probably, that's about the baseline of where we're getting. It's not normally any higher, but it's not normally any lower. And Brian has a really good way of kind of making it make sense whenever you purchase this animal.
Yeah, so Brent, the premiums, I think, has been a significant deterrent for people when they're looking at insurance. So when I first got started in this, one of the places that I investigated was South Africa, just simply because the market was so developed there. Lloyd's of London was the carrier for most of those breeders there. What I found when I asked those breeders what they were paying for insurance, their premiums were more like 3% annually. It wasn't 10%. And the reason for that is they were far more developed. They were more sophisticated in their approach. They had a lot longer history of using insurance as a hedge for kind of avoiding risk. And they were better in their breeding practices as they got down the road, which is why the populations got so high. We're just so new in this in terms of how the industry is developing that we're just not being treated like we know what we're doing. And so premiums they're really high, and they're gonna be high until we prove that we're taking the steps that are necessary to get them lower.
So you've been doing insurance for years, has your premiums came down?
So we have purchased transport insurance as well as full coverage insurance. I want to say we went through it. We had another group we were working with before we worked with you guys, and I think we've had some in the 7% range. Is that right?
Yeah.
Yeah, I think we've had some down around 7%, something like that. So yes, the premiums have come down, and I think one of the things they're talking about is selling your facility, selling what you're doing as a means of minimizing the risk that the insurance carrier is covering. And the more that you do, I think the more credit you get over time. But like with any brand new relationship, they're not going to give you any credibility until you prove that you actually do all those things. And so I think it's an important part of it. But one of the things that we talked about yesterday is they've had lots of people interested, lots of people interested, but not a lot of people calling back. And so if you look at it from the perspective of, let's say the animal's, I'm going to use a round number to make it easy. Let's say it's a $100,000 animal, and it's 10% per year. And you think, okay, well, this animal is going to live for 10 years, so why would I want to buy insurance? I'm going to basically buy the animal twice. So the way that Chris and I have kind of navigated this is that we've realized that this is not a long-term product for female animals. It's a two-year product. So if you're insuring, let's just say a bongo for $100,000, you're insuring the female. So you're buying $100,000 worth of insurance. Your premium is going to be $10,000 the first year, and your deductible is roughly 10% as well. So you have theoretically $20,000 of expense in the event that the bongo dies. But the bongo, you paid $100,000 for it, and you wrote that bongo off when it dies. You don't have the 68% limitation because it died. You get to depreciate the whole thing in the first year. So your break even on that bongo is $62,500, assuming you have other income to offset. And then you add on top of that the premiums that you're paying and the deductible, which is $20,000. So you're at $82,500 is what you have in the bongo, but you're going to get paid out $100,000. So even on an animal that you bought and you paid $100,000 for and it died, you still made money on that animal when you factor in the depreciation. So let's just say it goes 2 years and you have no female baby. You have males and no females. So you're still exposed in terms of your risk exposure. So now you've got $30,000 in premium and deductible in the event that the animal dies. And you have $62,500 as your break even because you paid $100,000, you wrote the animal off. But you're also getting to expense the premiums that you're paying. They're deductible. So you're still, even at the end of the second year, if that bongo dies, you're still not losing money. You have theoretically male offspring for the first 2 years, or maybe it's one male offspring, or maybe you got no offspring, but you're still not losing money even with paying the premium. So the way that my brother and I are approaching this is the minute we have a female offspring and we can sell that offspring, we have recovered all of our money. We have no reason to continue carrying insurance on the mother because we have no risk in her. We've recovered our investment off that female. If you go 3 years and all you have is males, well, sell the female. Like, get rid of her. Like, she's a boy producer, so send her down the road and sell her, get rid of her. And so the idea is that you've recovered all of your money for buying the bongo in the third year, but you've paid the premiums. So the worst case scenario that you can run into is that the animal lives for 3 years and you have all male offspring, and that's the maximum risk exposure that you have when you buy this insurance. If you're carrying it for a year or you're carrying it for 2 years, if you do the math out with the tax incentives, it is essentially impossible to lose money buying the insurance, even with a 10% premium and a 10% deductible. So I would encourage you to not think about this from the standpoint of, I'm going to carry this insurance for 10 years. It doesn't make any sense to do that in most cases. Some cases it may be the case. Like in Africa, Brent, when they were buying these policies, these were herd policies. They weren't individual animal policies. So they would buy a whole herd policy for the entire inventory that they had at 3% was their premium. I don't know what the deductibles were, but if you're buying individual animal insurance, the max I would ever consider carrying it out is 3 years, and that's in the event you have male babies. If you have a female baby, sell the baby, get your money out, and you're no longer needing insurance. You have no risk exposure. So Chris and I are kind of integrating this into our investment product where we're building in insurance cost for the first 2 years because it dramatically reduces your risk. I always said when I first got started doing this, if you can just make it past the first 2 years, because you're likely to have a female baby in that 2-year term, if you can just make it past the first 2 years, well, then you're in the safe zone. But you're uncovered, the first 2 years until you have that female baby. The male just doesn't pay, to get all your money back. And so think about this as a short-term product, not a long-term on individual animals. Yes, sir.
So the math that you're doing is, it's primarily when you're acquiring an animal. Because if I'm in year 2 with that animal, I'm not gonna be able, I can't really count that depreciation anymore, so the math doesn't work. So basically, it's when you're acquiring something, that's probably the best time, because that's when you take the first year, you do that depreciation. The second, you're acquiring this insurance at year 3, you can't use that same math.
The math works either way, because if you buy an animal in the first year, okay, and it lives into the second year, you've taken 68% depreciation in this calendar year. So the following year, you have 32% depreciation remaining. But if the animal dies, you're going to take all 32% that year. But the net effect is you're going to get to depreciate 100% no matter what. You're not getting multiple layers of depreciation, but what you are getting is you're getting to expense the premiums. So those premiums are tax deductible. So those add to the gap in terms of what it is that your upside is. But you're correct, your depreciation only happens once. But if it's 100% in year 1 or if it's a total of 100% over year 2, the net effect is the same. The math pencils out to be exactly the same. On $100,000, you end up with $37,500 of tax savings. Whether it's 1 year or whether it's 2 years or whether it's 5 years, it's the same number no matter what. Because it's based on what you paid for it. So, yes, sir.
Increase on the amount you cover, like say you have 100 animals and some are more or less expensive than other animals. Is it better on your more expensive animals or does it help it out of the less expensive animals?
I mean, you're buying insurance on the value of an animal, not necessarily the species. So it's the insured value. So, well, if you're doing individual animals or if you're doing a herd, it's essentially going to be the same. So if I've got 25 kudu that I'm insuring at $40,000 each, it's exactly the same as if I have 1 kudu at the same insured rate. So I've not found that varies. Yeah.
It's right. Yeah, it doesn't. It stays the same.
Yeah. The dollar value of the animal is really not really, it's not relevant because the premium amount is the percentage of the value that you're insuring. So if you have let's say a $3,000 animal, your premium's $300 annually at 10%. So if it's a $300,000 animal, it's the same 10% no matter what. So mathematically, it pencils out to be exactly the same regardless of the value.
And we encourage people that if they've got a group of animals, that they can take that loss if it were to pass away. They can self-insure and say, hey, that sucks, but I can let that go, right? But then you're going to have those other animals you say, I can't take that loss, right? If I lose that animal, I'm in trouble, I'm hurting off. That's the ones we encourage insurance, not the full group, unless you just want to be, completely protected. And some do. Some just don't like risk, and they're like, I want everybody covered. Well, that's fine. But if you can take that and live with some of those losses, financially, it is better because you're self-insuring and you're not putting out as much premium.
And the volume will matter too. If you have a bunch of one animal, I mean, you can self-insure that yourself because you're covering yourself.
Yeah.
One of the questions that was asked about proof of mortality, I will just say we have had mortalities that have been insured, and to date we have not had any rejections from the insurance company in terms of payout. They have paid on every claim that we've made. Yeah, we've not had anything that we've claimed. And it comes down to, you know, if the animal disappears, obviously that's an issue. But if you have a dead animal and you have a photograph of the animal and the animal has a tag in its ear, it's easy to identify that that is the animal that was insured.
A lot of extended coverages you can buy, like for heat stroke or something. Somebody has to come in and identify the live animal.
Yeah, so normally if an animal dies, that's where someone like Dr. Pam Barker comes in, and then they got to come in and do a post-mortem on that animal. And they prefer, 48, 72 hours. And sometimes we don't know if that animal's dead or right, but that's our job to make that argument to the carrier. And we've done everything that we can to provide. We provided videos that we had. We provided pictures that we've had. We can show the last time that a vet had visited that animal. And so that all goes into rating it and saying, this is everything we're doing to reduce our risk. This animal will die. It's just everyone dies, but this animal will die. How are we doing to make sure it doesn't die? And if it does, we know how it died.
One of the other reasons that we invited these guys was, does somebody have to do an investigation of the post-mortem?
Yeah, so that's where the vet would come in and do an analysis on the animal. Like Dr. Moorfield said, they can do a fecal sample and kind of see if there's any diseases or anything going on within that animal that we could have identified before, or just to give us an idea if this was a covered loss and here's what happened. So.
And there would be times when a vet wouldn't be needed, right, to identify it. I mean, there's certain instances where we pretty clear how it died, and those much simpler to get that moved along. But in the instance of walk out that's dead, we have no clue what happened. That's where, a vet comes in there.
So who pays for it?
What's that?
Who pays
For
for the vet?
the vets? That would be out-of-pocket expense for you. Okay. Yeah, so the vet fee, that would be out-of-pocket expense to you. The insurance carrier would not cover that. What's that?
Getting a health certificate on an animal up front is not terribly expensive. It's depends on whether the vet has to make a site visit or, and every vet is a little different, but it's not terribly expensive. And this has not been a significant expense related to insuring the animals for us at all. And I'll just tell you, on some of the mortalities that we've had, I don't know that we've had vet inspections on all of them. I mean, we've had a vet say, yeah, it's dead, but we haven't performed necropsies on all of these animals. Some of them we knew were sick and were on the decline, and we were able to predict that there was an issue coming, and so we were able to watch it closely. But we have not found this is a really strict, difficult process. It's actually been very easy. And one of the reasons we really encouraged Higginbotham to be a part of this is that the more people that do this and the more people that get involved, the more of a foundation that the insurance carriers have to evaluate risk. And if we do a good job of taking care of our animals, and we do a good job of providing veterinary care and feed and all the other things that we're supposed to be doing, I think we'll see the premiums coming down over a period of time, which is exactly what happened in South Africa. We're at the oh my God, these guys are idiots premium right now. But even at that premium level, it is still profitable to have the insurance for 2 years, even if the animal dies. And you can pencil the math out on this. It's not hard to calculate. If the animal dies within the first year or 2 years with your tax deductions, you have made money when the animal died. It's hard to believe, but that is how it pencils out when you factor in depreciation and expensing premiums. The goal is, in doing this, is to get a female baby and get your money back in your pocket and then go insure another animal. Yeah, go buy insurance on another animal. You don't need to have insurance on that one anymore because you no longer have any risk. So that's kind of the message that, as wildlife partners, that we have to share, is to say, these guys have been great for us. They've helped us tremendously. They offer a large suite of different insurance products, but specific to the animal insurance, I do not think approaching this from the perspective of, we're going to buy insurance for 8 or 10 years on this animal, it does not make economic sense at all. It is not a rational decision. It is a rational decision when you start looking at it from the perspective of a year, 2 years, and a max of 3. So,
One thing, sorry.
Houses, and then the issues you have with humans jumping over fences and running through your place, and then some angry animal decides to kill that person.
So we do provide liability insurance. You want to talk about ranch liability?
Yeah, we can, and we'll move to that. That's for on the ranch or the farm coverage. We're going to talk about that here in the end. And please understand, we are far better insurance people, though, than we are spellers. So that is supposed to say farm and ranch. But when you got two guys putting it together, we're not the best at that. But in talking about this, and we'll go ahead and jump forward, and then we can come back and answer any questions on this. So we have a number of products for your farm, your ranch, from property coverage to liability coverage, pretty much anything you can imagine, equipment coverage, right, exotic animal coverage, anything of those nature. But I think the question you're asking is, and I apologize, I didn't hear it, but kudu jumps out and hurts somebody? Or
No, he's talking about someone comes onto their land.
Gotcha. Right. Yeah, so that's liability coverage, right? And that would be offered through your farm or your ranch policy. Let me ask you a question when it comes to that. How many here are farm or ranch owners? Okay. How many of you farm or ranch owners buy insurance on farm or ranch? Be liability, property, anything like that, right? Most of us do. Most of the time, a lot of times it's required. Well, to your question, the liability, which we call general liability, right? So general liability protects us for any bodily injury or property damage. That's the two key concepts. Bodily injury or property damage, we as an organization, you as a farm owner, cause to anybody else, right? We would think somebody jumps inside our fence, well, shame on them, it's on them, we're off the hook. Well, that's not our world today. We're on the hook, even though they have no business in there. But that's where your general liability comes in. If that person is injured, that's the bodily injury piece. So the definition of general liability. So that's the key to making sure everybody carries general liability or farm liability, ranch liability. You know, it's called different things, works the same way, but very, very important when we have these farms, as well as whatever's in our ranch farm gets out and hurts somebody and they track it back to us. Same thing. Sorry, you're gonna have to help me here. Yeah, great question. So a lot of different exposures. Do we need different policies or can we roll it all in? Great question. So the answer is in most cases, we can roll it all in, right? In most cases, there may be a few examples where you're doing something so, far outside of the box that the normal carriers step back and go, ooh, I'm not comfortable with that. And so we may have to have a separate policy. But in most cases, for ranches, when we're talking breeding operations, hunting operations, zoos, dude ranches, all those different things, absolutely. We encourage, let's roll that into one policy altogether. That way there's no confusion at a time of a claim. Who's paying, what's paying, how much is paying. So that's very important on that. So that's a great question. And one of the things we wanted to segue into earlier was, insurance is big time about relationship. Just like anything else we do, it's relationship. That's a relationship between the client and your agent or broker. But as much as that, it's between your broker and the insurance carriers. Because the more business we do with these insurance carriers, the more good business we bring to them, the more credit we get on our premiums, right? Lower premiums for our clients, as well as at the time of loss, to the question earlier, we don't get as much pushback, right? When we say, hey, this is how the animal died, well, you know what? We built up that relationship. We've got the trust there, and they go, hey, we understand, we've got it, we'll pay out, right? But when it's a brand new relationship like a lot of this industry is, they're trying to build trust. We're trying to build credibility with these insurance carriers. And so it just takes a little bit of time to form that relationship. But yeah, absolutely. I think in that world, we try to combine it and put everything together. And so then it's the matter of having the correct, we call them markets in our world, but the correct insurance carriers, right? Because when we talk about exotic dude ranches, hunting operations, there's not a ton of carriers out there that will do that. They're not. And they're getting, unfortunately, a little bit more limited due to the economy, right? So the key is when you go to your agent is making sure they have access to as many insurance carriers as possible, because most people don't know. When you are an insurance agent such as ourselves, you don't have access to all insurance carriers, Hartford, Travelers, right? You have to have contracts with them. So a lot of times your larger insurance agents have more contracts and more ability to go to the different insurance carriers and get you a quote. So very important that you've got the right agent and the right carriers in place. Sure. Right, right.
And then what if, I know we have to, kind of, they touched on if you needed to provide documentation. What if you've been breeding for so many years on all these different that you don't have, documentation of every single animal on that property? We've got game cameras, not, surveillance like on some of the ranches, but game cameras, is that documentation also able to be used to obtain the policy?
Any information you can provide is the better. Like we were talking about earlier, this is a new industry. The exotic wildlife, insurance is new. And the biggest thing that we want to prove, just like you have, is having the documentation, but also, as Brian spoke to earlier, is what we're doing on these ranches. This isn't a hobby that we're all doing. We've turned it into a business. And so whenever we're talking to the insurance carriers and they're like, well, I have all these animals that we're trying to insure. And they're like, man, what are these people doing? Are they just throwing around money just to insure animals? It's like, no, there's actually a business plan involved. And so that's why it's good for us to be here to listen to y'all's feedback and concerns and understand that there is a business plan here. That way, when we take it to the markets, like Brent said, we're able to describe, hey, these guys aren't just going around full reeling and hunting animals just for fun. There's actually a business plan involved. And so even if you're not as technologically sound as stuff, you still have processes along that you make for yourself to mitigate risk. So anything that you can provide that we can give to the carrier just makes your risk more attractive. Any other questions? I know we love talking about insurance. Yes, sir. You're from East Texas? Yeah. Well, and just being upfront about that throughout the process is like, one, we know we need a vet certificate. Not every insured knows that they're going to need a vet certificate. So if you can give us that information up front and you're still interested in it, and we can go to the carrier and be like, hey, these guys have a very safe and healthy Nyala. Getting a vet out there is going to be burdensome. We're going to need some extension on this provision to get these guys insured. And so that's just you being transparent with us. That way we can push back to the carrier. Because if we don't have that information, the carrier's just like, okay, we can't get a vet certificate on this animal. We don't know, because whenever you insure property, you normally have an adjuster, comes out, inspects the property, loss control, risk control. They can't do that for these animals. They're relying on industry experts.
Okay. And so the answer is we don't have a network right now, but that's a great idea. That's something that we can take back. Because in a lot of areas, we do have those networks, right? If somebody's hurt in work comp, we do have those networks of hospitals and doctors' offices, as well as auto, trucking. We've got those networks, not just in Texas, but all over the United States. So that's something we need to look at developing, but that's a great idea, putting something together, because I'm assuming that would be beneficial to the vets to be able to refer that type of business. So thank you for that. Right. Gotcha.
Great
gotcha.
question.
Great point. Thank you. Anybody else before we jump off here? So last thing I'll touch on the farm and ranch, like I said, we can handle anything when it comes to farm and ranch, from the property, the liability, equipment, animals, things of that nature. Please realize, and I want to share with you, the property market, I'm sure most of y'all know it if you own property, it hasn't gone down in the last 3 or 4 years. And most of y'all probably looking at it, it wouldn't shock me if some of you said it's gone up 100% in the last 3 or 4 years. That's reality. Property has skyrocketed the last 3 years, and that's due to the number of storms across the United States. The last 5 years have been the worst 5 years in history in terms of number of cat storms. Those are our largest, most severe storms. Been horrible. So the insurance companies are paying out far more than they have in the previous years. So what are they going to do? They're going to pass that along, right? They're not going to not make money. Insurance companies, they're going to make money always. So they just pass it along to all of us that are buying the coverage. So understand the property market has gone up, but the key there is finding somebody that has a bunch of options for you that they can go out and quote those carriers instead of just 1 or 2. If you're going with somebody that has 1 or 2 options, that's all they've got, you're kind of stuck with whatever comes. If you go to somebody that's got a bunch of different options out there, there's a lot of variability in the marketplace, and typically we can put something together that's at least reasonable in this marketplace. Now, I think things are going to start changing the next 12 to 18 months. We're seeing the insurance carriers start making some big profits again. Typically, when that happens, prices start falling. So I think there's some encouraging signs coming, but it may take just a little bit.
Well, thank you for
you
your
all very
time,
much.
and thank you, Wildlife Partners. Let's eat some lunch.
Thanks, guys. So one of the things that they said to me when we talked yesterday was they have lots of people that are interested and lots of people that ask questions, but then they don't call back. So